Hi, everyone, and welcome to our Wednesday episode, the Altcoin Bible. As you're aware, we normally have these episodes in the middle of the month where we look at our CCI portfolio and how it's tracking. And right off the bat, not so well. In the last 72 hours, we've seen almost a full-blown traditional market meltdown, which of course flows into crypto. And Bitcoin and crypto have been getting all the major headlines right now about how far it's melting down, how it's crashed, and all that. Look, we've seen it all before. We've heard all the noise before. We've just got to stay objective, focus on the longer term picture. I'm going to call today's episode the bear market pivot because we're going to look at our CCI portfolio and we're going to change it up to provide the most value for you guys. We don't think in the current circumstance, having buy and sell signals, for relatively short-term moves is really going to benefit everyone to a great degree. We are in an accumulation phase where we really need a plan for the next 6 to 12 months, if not longer, for this cycle. So we need to look forward to that next cycle, that next big bull market boom, which I don't think is too far away. When you look at the macro, it will try and resolve itself eventually, but we have to be patient. And in that respect, we need to start looking at the charts from a higher zoomed out perspective. So daily charts just aren't cutting it, in my opinion. I think we need to look at the weekly chart and we need to step back and look exactly where and how far these charts are likely to go to, and where in these charts actually present the most value for you if you're looking at entry points on a longer term perspective. By all means, I think the last few months have been still really good prices. When you look at the drawdown, it's actually seen, but you don't really want to be dollar cost averaging at higher levels and then the market just continues to drop. It's just not great. So we want to just zoom out and have that bigger picture for your future success. So we really want to lay those seeds now that will bear fruit in the future. And I want to show you the chart that I'm going to just start with first. So that would be Bitcoin and the US dollar, just to give you an idea of what I'm talking about here. So we have a look here. Our previous buy and sell signals on the newsletter, now I've taken off the words so you can just see it, is these top three here. Now I'm on the weekly, but these were our buy signals here. So, and again, I just want to highlight that these buy and sell signals are really just areas of resistance. So we expect in these areas, the market is going to get sticky, where a lot of trading volume is happening. So you will see either a bounce or a move into support where we see a bit of volatility either way. So they're generally good areas for you to start a DCA strategy for a longer term. But again, we want to zoom out and provide the most value possible for you guys. And you can see here, this has actually fared quite well, to be honest. It's come down to that 200 weekly moving average in the red line there. You can see one candle. So each of these candles represents a weekly time frame of price action. So we've just had consistent selling through here, all the way down to the 200 weekly moving average. Now, in our post today, in our VIP and graduates group, I've just created or put down my thoughts really on what that means and historically, when we've reached the 200 moving average, what happens. We'll also cover that in our bi-weekly Musketeer catch up, which I think you'll find really, really valuable. That's with Joe, myself and Tristan. But essentially, every bear market cycle, we come back and test the 200 weekly moving average, that red line there. We also can go below it. It's not the end of the world, but generally this is a barometer after we've had a huge expansive phase. So a few standard deviations away from this 200, so long-term moving average. You can see here in 2017, we got up to 20,000. Then we've had the big reversion back to the mean. Also had the runs up to 62,000 and also 69,000. When did we get? Yeah, 69,000. And then we've had the long drawn out fall back to the 200 on the mean. So this is a fairly good barometer where we find market bottom. So true capitulation. It doesn't mean that happens in a flash. This market, patience is really rewarded here if you're in this market for the longer term. And it generally gives you a fair amount of time in these lows until it just grinds everyone out. And then, we slowly see a recovery. So in that mode, this may not be the end. We could absolutely go down to 18, 17, maybe even 15,000, if not lower. If the worst happens, if Celsius has to liquidate their entire portfolio, Bitcoin, Ether, all that, there is still downside. And if traditional markets throw a tantrum again, there is the thought that we could go lower. However, this market has absorbed a heck of a lot of sell pressure, and we know there are absolutely willing buyers around the 200 and lower. So We just have to keep that in mind. But if we are looking at the broader picture, I'm on the weekly now. So the weekly will give you far more data in plotting these long-term accumulations. So we're no longer looking for those short-term trades. I'll still have sell points on the charts and also in the table, which you can look at. But for example, if you were to say buy in my new sell zones, which I'm going to do, and I've just whipped up a couple, I'll explain why I've put them there in a sec. If you were to buy in these zones here, so 19, let's say 19,000 to 21,000, the sell zone for that one would be around 30,000. That'd be your first point, just because it is the main line of resistance. And then you really would look into these areas here. I'll have to dive into some of the areas where heavy volume is, also Fibonacci retracements and all that. But you'd love to take some profits, through this area, because you've just run into resistance all through here. Take some profit off, hold for longer term as well. So that's kind of my thinking. But DCAing when it comes to these zones, or performing those correction buys, which we teach in the course, absolutely imperative when you get into these zones of high interest. There's tremendous value in these areas. Just don't think it's going to be in them for very long. There's just too many investors that think Bitcoin is undervalued even now. And if it gets below 20,000, there's going to be a bit of a frenzy. So that's just my take on it. We also can look at larger data sets as well. So longer term indicators. So the RSI is a great indicator on the daily for it, all that. But on the weekly, it just becomes so much more laser focused. So right now we have a look on the weekly here. Each peak gets a little bit lower, even through the uptrend, which is a bit of a warning sign. And we are now down into that 23, which is severely oversold on the RSI. Now, oversold and overbought gets thrown around a little bit on lower term timeframes, but when you get onto these higher timeframes or lower timeframes, depending on how you look at it, say on the weekly, that extra data is just so useful because you can pair it up to what happened previously. And the longer term time frame, the more accurate it is in my experience. So if we're down here at 20, so that's 26, not 23, we can go back in history and see when we were this oversold previously. So when the bulls had so much momentum going into their corner, it's when the bears, had so much momentum in their corner. Well, lo and behold, where was it? 2018, in the great depths of that bear market, we got down to 30. We've never really been this low on the weekly. So that for me is a pretty good sign that we're in an extreme inflection point. Whether we have the reversal now or in a few months' time, doesn't matter. You're not going to pick the exact bottom. So have a lot of these levels programmed in your head automatically ready to go if you are keen for long-term accumulation. Have the long game in mind. Right now there is tremendous value, but we're just not seeing the response yet we want to see. So that's why further downsides is likely. Also, longer term timeframes allows us to use these longer term indicators that we can go here. So Fibonacci retracement, if you have a look here. So the next fib, so 0.786, and you'd be surprised on how many of these charts over a weekly time frame, over a long term, come back to the 0.786 consistently. Right now, Bitcoin is not there yet. It would hit it at 18,300. I think that's about right for the pullback, but you just can't be sure. And there's no point making absolute claims because you're not going to pick the absolute bottom. You want to look like a hero, sure, but who cares? If you're DCAing, down, so dollar cost averaging down from 30,000, and now you go a bit heavier now that we're under the 200 moving average. Sure, sounds good. That's probably a good way to approach it. You're kind of hedging yourself. You think it might go lower, but you're still buying a little bit here and there now, just in case it doesn't go lower, because you are not going to get it 100% right. No one ever does. So the Fibonacci looks actually good for it to go a little bit lower. That being said, it could absolutely stop here at the 200 weekly moving average. So just keep that in mind as well. Now, if we're looking at why these buy zones are here, okay, well, first of all, this first box here, and I'll just zoom in just a bit more for you. This first box here represents that psychological resistance, 20,000. It also represents the previous high of this peak, 217 bull run. So that will be a huge area of resistance at 20,000. It will be pretty wild if it breaks. And I think if it breaks, it will create a sort of a cascade liquidations of shorts getting liquidated that have just hung their positions underneath 20,000. That will create downward pressure and maybe a wick that really goes down to maybe 17, 18, who knows. So that is absolutely on the cards, but still this region represents tremendous value. Anywhere underneath the 200 weekly moving average historically is a great place to buy. Again, if you look back on previous markets, COVID, the black swan, came out of really nowhere and absolutely crushed the 200 moving average. But you can see here it whipped all the way down and got bought straight back up from about 3,000. But in a traditional quote unquote crypto bear market, we tag it and we grind along it for a little while. Again, this cycle's a little bit different. So I would be very surprised if we do not close beneath it and scare a lot of people, come down a bit further, grind our way out slowly. You just don't know, which is why we look at these, larger retracement areas. Now, the next area would be 18,000 to around 15,000. Now, just with these signals as well, I might create a bit more gaps between them. Doesn't mean you can't stack orders in these areas in between, but really they are just no man's land. Where there's not a lot of volume, price can just whipsaw through them very quickly. So you can have bid set there, of course, but again, just want to emphasize that these bid areas are where we've seen a lot of volume. So generally they become sticky, where you might run into a bounce. So if you have a bid set lower than one of these levels, it might not get hit, which is why I try to be as close as possible to some of these resistance levels, because they are just so useful. Now, this next phase here is generally because this goes down to that mini high we had in June 2019. So very, very important that $15,000 level is there. I think this is going to be actually an interesting level. If we break 20,000, I think 15 could absolutely get tagged. So just keep that in mind. It also is generally the top of that volume area. And finally, and this is the Hail Mary, if it does get down to this point, I would be extremely surprised. But this is where we run into this unreal volume that we saw all through the previous market cycle. And I just like to emphasize, we've never closed beneath the previous all-time high. So that's 20,000. If we close beneath it, we're in a new paradigm. We've never been there before, but with global markets doing their thing, I wouldn't be surprised if this might be the first time that it does happen. Now, this area, this would be just to have bids just set, automatically. You buy anything, if it does weaken there overnight when you're asleep, happy days, you wake up, you might be up a little bit, but generally you just have to think longer term. Do you care if you buy at, 20,000, 18, 17, 16, 15, if Bitcoin will be, much, much, much higher by orders of magnitude in the next 5 to 10? Do you care? It's sort of apples and oranges, but, when you look at the longer term, just be objective and think about it like that. Okay, so, excuse me. And sorry about the noise, guys. We've got someone cutting down a tree next door. Yep, we covered the bear market, covered the fib. So I think this is going to work out really well if we cover that longer term stuff. I think it also looks good on Ethereum here as well. I haven't put the boxes in, but you can sort of see where things start to get really interesting. Now, right now, I've actually dipped below Ethereum's previous all-time high, January 2018, which is very interesting. This might be the first one to close beneath. We will have to see. Closing beneath 1,000 is going to be very, very interesting, and that would automatically trigger for me about 800. And then moving down a bit lower, that's the next level, 463. Now, you can see on the weekly, we're dealing with a lot larger numbers. So it'll give you a lot more scope as well. So if we're seeing a drop from here, what's that, 1,200, let's say, down to 800, there's a nice gap there. Gives you a bit more scope to have a look at why things are working the way they are. And I think it will really, really help. All right. Yeah, I think Ethereum is just very, very similar to Bitcoin in most respects. Hitting its 200, we really have to watch these levels, and changing that to the weekly will really help. Now, just quickly, I'll show you Metis, just to see what we're looking. So this is actually adhered to the buy and sell signals, bounced right off that danger zone. So why has it bounced off that danger zone, and why have I put it there? It's because that is the very edge of the volume support. So it's where heavy bidders have decided to put the flag in the ground and hold the line. If it drops beneath this, then the market knows that we're going lower, and then it will fall to a new structure of support down below. Have a look here. This isn't really bullish at all, and I'll show you why in a sec. But just quickly, these are some moves that, if you time it right, if you have your alerts really tight and set, let's say bounce off one of these resistance zones there, and you bought where we said here in this zone here, waited till, say, the top of this area, you'd be up 50% in a move. So this is why these resistance zones are really helpful. But again, in a short term, I just don't think it's very useful for you guys in a bear market, because and the majority of the time, bounces will be sold into very quickly. A lot of the sell points that we've been giving you just won't be reached. So it's counterintuitive, and yeah, longer term investing right now is how to be looking at things, especially in this bear market. And down here as well, what's this bounce that we've had off that danger zone? So 24%, nothing to sneeze home. You know, it maintains in here, that's great. This area of volume is going to be very, very sticky. Now, the issue that I have currently with Metis and this move here is we haven't made a higher high yet. So we've actually made a lower low. So we really wanted this move here. This looks really promising, this in here. So bounce here, then there's a high there, then there's a lower low there, not lower low, lower high there, and I just got that wrong again. Higher low, my goodness. High, then a low, then another high, then another low. So you can sort of see that just gaining momentum there and moving upwards in that channel, which is what you really want to see that new uptrend. But then the market fully folded on itself, and we saw it down here. So what we want to see from Metis is to create that same movement, same momentum higher. And right now, market looks a little bit dodgy, especially for altcoins. So yeah, that's what I wanted to get. Oh, look at that, 2000. Here we go. This might be live. We might be about to crack it. Yeah. See, for me, looking at this chart on the daily as opposed to the weekly, this looks like it's going to rocket into the teens pretty soon. There's really nothing stopping that now, especially after it's cut through that danger zone. So this could be that last capitulation, or we just find that we just get stuck here. We just keep getting buyers that come in and buy it up, but we just want to be careful predicting that bottom. All right, guys. Well, I hope you found that informative. Unfortunately, I couldn't really go through too much just because of the market conditions, and also what we're going to deliver is going to be in this next newsletter. So hopefully the thought process has helped where we want to go. I know this same thought process helped myself tremendously as an investor through the last bear market. With that drop from 10, 12,000 all the way down to 3,000. Just had to take a step back, look at what the market's telling you, especially on the weekly with more data, and you could see those points that it was hitting. It was serious points of resistance where large buyers have just been set. They've been waiting patiently for these levels to come in, and their buys just get hit, market bounces, and we likely start a new uptrend. So that's generally what happens when we find that ultimate bottom. You can see that it's just being sticky in here, which would be interesting. I think this is what happens for a little while now. We just sort of oscillate in here, might jump through there, and we slowly grind out of this situation. But again, very, very hard to tell. All right, guys, have a wonderful day. We'll catch you on Friday for our Friday roundup. Hope you have a great one. Ta, bye.